This is Short Hammer. It is the 28th of August, 2022, and this is Trading Zones. We had a amazing week, and this past trading week was just great. And if you look at the last video, what did we talk about? There's a lot of bullish expectation, but what did the Fed say in the minutes, right? They said that the market was wrong in their expectation. And what did we say in the video before that? What we said in the video before that was what? That even though the last few inflation indicators showed a slight uh, downtick in inflation, the Fed was raising interest rates well before we were even in the eights or the sevens, right? So that would beg to reason that they want inflation to be much lower, which would logically lead to the thought that they're going to keep raising interest rates until we get down to the number that they feel comfortable, which we're nowhere near. So the markets, when we said part of the rally, part of the excitement was that because of this smidgen lower inflation numbers that the Fed may decide to cut rates, and we're like, that's insane. It doesn't make any sense. Um, and so we were right in what we were thinking in our thesis, right? And so it paid out well in the markets, right? We figured that the market would react strongly to a what's the word? A It's not a rebuke, right? But proof that that thought process that rallied the markets was wrong. And we said that one of the main sectors that really has not truly been hit yet has been real estate. And this, that maybe that's coming. I think it is coming. But we'll see. So moving forward, what should we look at? I think what happened on Friday was devastating for retail traders and those that were hopeful that that the market was going to go up and make new highs. And the reason it was devastating is that amount of selling really, 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 really hurts that upward momentum that we were building, right? And I know we're looking here at the 4-hour chart, so it looks a little different. And this is the rust, but um, let's keep it moving. And yeah, let's keep it moving. So looking at the rust, we pull back, financials pull back, and that was definitely a great play on Friday. The expectation that financials would, regardless of what the announcement was, I didn't know that every single thing would pull back hard, but financials and tech I knew would definitely take a hit. So looking at this, we are right around the 1890s. Okay, so what do we look at? The next area is 1880s, 1882. Below that is 1860s, 1863. Below that is 1829. So the potential, right, is for us to get back down here around the 1790s. We're not there now, but there is a potential for that. We have to see how much selling we see next week, right? And so what we don't want to be is what's the word? Premature in our thought that this is going to sell all the way out, right? We don't want to be premature in that thought. But if we look back, we see that with the when we begin to sell, that it can be extreme. We do see a shelf here, right around the 1870s. Look at this little shelf here. So that may be a good area to see if we see any reactions. And you can see the reversals on the 3rd of June and on the 7th of June. And we see the shelf on the 5th of May through the 6th of May. So we'll see if we see any pause there in the 1870s, but I don't expect a direct sell down. We'll see if we see a bounce. But I do expect some people to start rotating out of their longs, expecting the market to move lower. and we can bounce, right? But I'll get to that in the next chart. So if we do bounce, we should look at a back test of the 1900s, like 1911-ish, 1905-ish, back to that area, and seeing if we can get back over that, which is technically this hitch here that you see on the 4-hour, where it drops into the 1911 area, then the next candle begins to sell. So right around, if we could pull back into that area, that'd be interesting. I don't know if we have enough strength for that. We might just continue to sell down to the 1870s on the Russ, and you can see how that could really impact banks, right? Because if you're saying that we're going to be more hawkish, then that should technically create more turbulence in the real estate markets, which would mean less loan originations, and eventually the higher interest rates do benefit banks, but the initial squeeze on the economy does mean that less business is getting done, right? There are less people that are, as far as retail people that are going out to get loans, and also companies too. They do make more money when companies have to service their debt, right? Because they have to refinance at a higher rate. But the initial generation of new business is constricted when interest rates go up. So watching this, what we want to see, we mentioned these levels, and yeah, so we'll see. So let's keep it moving. Head on over to the MES, and remember the Russ small caps financials, right? MES, we already sold through our level here, the 4077 by the 4154, straight cut through like a hot knife through butter. Looking for a back test of the 4075 area. That would be beautiful, but I don't know if we're going to get that. Just how sharply we cut through this, we might just keep selling, right? And there is a hitch down here around the 4016-ish area by the 39.99. We'll see if we hit that directly, but there is a chance we just continue to sell all the way down here to around our 39.60s level, right? That's possible. What I would expect though is, unless there's a gap down, which there is a possibility that we do have a gap down, unless there's a gap down, we might see a slight pullback first and then continuation to the downside. But the question is that going to happen in the overnight session, or is that going to happen during the intraday session on Monday? So that will be something that's interesting to watch. September usually is a slightly bearish month, and everyone has different reasons why that is, but it could just be institutional money potentially. I don't know, just theories, right? Institutional money maybe getting back from the summer break, and they want that market to be lower so they can get a good run into the holiday season, right? So we'll see. But at the same time, just remember, we are still in a bear market, right? And so no matter how hard that pullback was, we are in a bear market, right? And for someone that's taking a peek at this does look like, right, and a prominent head and shoulders pattern, right? For those that I like patterns. It does look like that, right? So the potential is definitely a strong sell, and maybe we go lower below this area. That'll be deep into the 3700s. We have to see how all this plays out, right? We have to see. We just have to see. Maybe they're already technically, but we have to see how this plays out. I'm not gonna, but just watch these levels that I just mentioned, and if we pull back, watch the 4075s. If you remember, the area that we were between was the 4110s, and the was so funny, right? The top of the zone, the 4150s by 4160-ish area, right? We were stuck in there for a little bit until we broke out of that. But then we just cut back through that like butter. So now that we're below that, those 4110s, you see this area here, that line. Now that we're back below that, we got to see how far we can go. But just be careful. Don't try to catch a falling knife. Wait for the market to tell you that it's remounted, right? Because this is a strong I'll say a strong rejection, and also it's it's definitely a blow to the rumors that the Fed was considering reducing rate hikes. It's a blow, and the market is going to find a way to create another narrative of why we should go up. But if you look at the world, right, and what's going on right now, we still have the war between Russia and Ukraine. We're going to have a energy crisis during the winter when Russia puts the squeeze on oil or fuel flows, gas flows to Europe. That's going to be an issue, especially if the winter is a cold one. We still have the turbulence between China and the U.S. in some aspects over Taiwan, and also China's support of Russia. Even though President Biden did work out or is working out a few deals when it comes to trade with China right now. It's funny how all these things work. The inflation is still high, and it's probably going to even if we consider that inflation is peaked, right? Some people saying inflation has peaked. We'll see. Even if we say inflation has peaked, that's just the United States. It's a global economy. Inflation has not peaked for Europe by any stretch of the imagination. And there are a few countries in the European Union. They're in a tough spot right now as far as their debt and what's going on in their societies. They're in a tough spot. So just needless to say, I think that there's a lot more to unwind here. And also with the real estate market not really seeing a meaningful pullback yet, I think there's a lot more to unwind. And there was a slight dip in mortgage rates, which may be headed back up as the Fed continues to hike those rates in their quest to combat inflation, right? And the dollar, we're saying the dollar, just watch that DXY. That bad fella keeps popping, right, and keeps going up. And so that's always an issue. That's always an issue when it comes to the markets, because that means that the exchange rate and the cost of trade is definitely unfavorable globally, right? So, but let's watch these levels on the MES that I just mentioned, right? If we back test into this zone, but below here, I'm bearish. Like I've been slightly bearish because I still think we're in a bear market, even with the buy up. But yeah, nice bounce, but no, like this is you look at all this. This is just no, right? No. From the 4300s down, it's just no, no, no. Like it's. But it was a good run. So let's see where we go from here. I guess the question is, do we retest these lows? We'll see. We'll see what the market does. But I do like what we're seeing. We mentioned some levels to keep an eye out for. Please keep an eye out for those levels. If we happen to sell through, we have these lines, 39.20s, but definitely around these 39.60s. That'd be an interesting level if we got to it. I think we will get to it. And right down here, the 38.50s, 38.55 is an interesting level. We'll see what happens, if when we get to that. But this upcoming week is going to be interesting, right? Because I think there may be a slight bit of churn, as those that may be still long may be looking for a graceful exit. But we'll see. But we shall see. We don't forecast. We just, give our opinions on some of the things that we're seeing. Okay, here we go. Definitely below this little shelf here, the 12.820s. And let's see this extension. So we have this uptrend here, and this uptrend, even though we've had a few slight breaches, this has been holding since mid-June, right? And so we're going back into that right here around 12.470s. And that to me is going to be an interesting thing because if we breach that and then we pull back and we sell, then it may get fascinating. It may get really, really fascinating. And a level that I believe that we always mention is what the 12,500s is the area, the line of demarcation, right? When you get back below those, if you're above the 12,500 by 12,600 level, we're bullish. Below this level, more bearish than not. So we have to see if we continue to see selling below this area. A break of the 12,500s and 12,400s for me would be a sign. But what's going to also be interesting is, do we break through this trend line, this multi-month trend line, uptrend line? Do we sell through that? And if we do, are we going to end up making new lows? And so an area to watch is the 12,048 by the 11,710s, the 12,500s by the 12,600s. We're right in that area here. We'll see if we see any reaction, any bounce to the upside here. But just that we're in this area is interesting. We'll see what the reaction is, but I don't see what the what would be the catalyst to buy here. I just don't see it. I don't know where the good news is coming from. So we'll see. I definitely believe that there's more downside in here. We'll watch this level and see what happens. I think more continued downside, even if we see a pullback, I think more continued downside. And maybe the reality is maybe September will be a month that the market dips to, maybe it doesn't make a new low. We don't know, but maybe it dips deep enough where institutional investors feel good about getting into some positions into the end of the year, right? You never know. So we'll see how that plays out, but watch these levels that we just mentioned with this uptrend here. If we do pull back, I'd watch the 12,720s to see if we see anything here. We see it's a breakout level here above these little rejections. So we'll see what happens around that level. But being that we're down here below the 12,600s, I am thinking that if this area doesn't hold and we go below that, we flip bearish, right? And so I'd be short everything against those 12,500 to 12,600s area, like right in that area, like basically right about here. I'll be short this, thinking that we don't get back over the 12,700s. That's my thought process. Might be wrong, but we want to see what happens around this trend line, around these 12,400s. I think that's going to be interesting. 12,460-ish. You're never sure where it may hit, but definitely watching this trend line. The M&Qs. Okay, let's keep it moving. Amazon. Okay, nice pullback here. Amazon is now going down. I think the next stop is probably down around the 124s. Maybe we go lower. Below that, we have the 106s. There are some in-between stops here that we may see. Amazon probably should do really well heading into the holidays. So any significant dip here may be a good opportunity to pick it up for the holiday run, right? And so you just have to wait for the market to bottom out again. And what I'll be looking for is not just to pick up for the holiday run. I would be looking for a change in market sentiment. Just now, the market sentiment switched back to bearish or back to negative, back to selling. This is not the time to jump in and get long, in my opinion. Maybe I'm wrong, but this isn't the time. There always is a what's the word? There's always a sentiment, a thesis, something going on in the market that the market attaches to cause the rally or to cause the selling. What the market is attached to right now is Jackson Hole, Powell, interest rates, hawkish. That's what the market is attached to right now. That is the current sentiment. Now, can that over time, can that sentiment change and the market begin to bake in that, this is what the rates are going to be? We know this. This is no longer a surprise. Nobody is shocked. The market can bake that in. And so we'll see what happens at that point. But the market comes up with a thesis, with a theory, and then it attaches itself to whatever that narrative is, and the market can go either direction. But as of right now, I think the narrative is down. If we see a pullback, we really need to get through the 132-ish, 133-ish area. I just don't see the reason why we would. So we have to wait and see. But just mention some pretty good levels there. Jumping over to Netflix. Netflix pulling back. Essentially 204 is the area. 222 right there now. We have to see how deep this continues. I mean, we've seen, significant selling before, and this is a nice run post earnings. You see this little shelf here, this 220. You almost see a shelf right in this area, this 220 by 222, right in this area is the shelf. But not sure buyers are going to buy or jump in with the current sentiment. Maybe the next dip is down into this area here, the 213s. And we can see the tops here right around the 207s. That's a potential area where we can see some, maybe a little bit 207s and 204s. You can see a little bit of reaction. But those are the levels that I'll be watching initially on Netflix. NVIDIA, they beat on earnings, but guided down. And we are, it's funny, below the 181s. What do we see? Selling and potential extension down here into the 158s. So we have to see how that plays out. I believe we're going to hit that bottom, potentially sell through. But this is a zone that NVIDIA has been in, right? And that's why we have this area marked off. Below the 157, 80s, 158-ish area. Then we have 138.47. Not saying that we're going to go there directly, but we'll see how this plays out. The 119s. Anywhere in here, we have to remember all of these inflection points, and we see some of these pivots in here also. And any one of these inflection points, the narrative can change in the market, right? Or the narratives can change for a specific ticker. This is where we begin. If you're someone who doesn't like to go short, this is where you need to dig into the market and find particular either indexes or indices or tickers that are going to rise as the most of the market is going down. There's complete correlation in the market right now, but you have to find the tickers, if you're only go long, that are not going down. And maybe that's consumer staples, maybe that's energy, but you have to find, or maybe that's a specific index. If you're trading SARC or whatever it is that you're going to trade, you have to find something that is going up. And so that's something to watch out for. Keep an eye on these levels mentioned on the NVIDIA. A pullback into the 166-ish, 168-ish area wouldn't be surprising. But we'll see if we get a direct sell or if we even open up with a gap down, right? That's the other thing that could happen, is that Monday we're gap down. And rather than us, pulling back a little bit, we open at a lower rate, at a lower level, and then the market kind of goes sideways for a little bit, chops around before it decides to either go lower or pull back and give us a nice technical back test before selling more. I do think we're going to continue to go down. I think we're going to erase all of those gains, all of those bounces that we saw when the narrative changed. So when the rumor changed and it came out that the Fed may reduce the rate hikes, which came out not this CPI, but the previous CPI. I think that from then till now is what's going to be erased if it hasn't already been erased. Let's keep moving. Microsoft took a significant hit. And next area 265, below that 263. My thoughts on Microsoft, and this is on the 4-hour. If I were Microsoft, where would I consider bouncing? So flip to the daily chart. This is the area here, right? These 267s, but I don't think we're going to stop here. I think we may see some 250s on Microsoft. It's possible. Definitely possible. Yeah, yeah, definitely possible here. So let's see how deep this goes. But next area that stands out to me is 261. I which I mentioned the higher level here, but I'll look at the 261, 260, 261 area. And the next area that stands out to me is maybe the 252 into the 250-ish area. Then we're down here around the pop gold. So we'll see how this plays out on Microsoft. A lot of these companies, and that's so funny. And we talked about this last video. A lot of these companies are talking about that they're laying off workers in expectation of a global recession. They're telling us this, yet the market is saying, hey, maybe the Fed is going to reduce interest rates and not hike as much, and we're bullish into the end of the year. The Fed does not care anything about the market. They care maybe a smidgen. The Fed, it's a political, slightly rational, irrational position, right? That the Fed is going to do what's in the best interest of the Fed, period. And their prerogative changes based on their perspective of the markets, right? And right now, their main thing is reduce inflation. Whenever inflation is high, recession is coming. When a recession hits, the Fed gets hammered. So even if their interest rate hikes do help to bring about a recession, what they believe is that once they lower inflation, that they will be able to course correct and revitalize the economy. It's a cycle. Revitalize the economy by lowering interest rates, whereas then people are going to become more interested in buying things, which then pushes the market back up, right? But then what they're hoping is that it's almost like a reset button. They're hoping that as the market goes back up, that they would now not be saying that inflation is transitory, and they will be better able to manage the market as it grows to make sure that inflation doesn't become the issue that it is right now. So I think that's their theory, right? That even if we have to short term hurt the economy in order to get inflation under control, once we get inflation under control, almost like antibiotics, right? You take antibiotics, doesn't feel good, doesn't taste good, but it kills the virus. And then after it kills the good bacteria, bad bacteria, kills everything, then from the fresh slate, the thought is now we can, now that we've gotten rid of that thing, inflation being the virus, now we could rebuild your immune system. We could rebuild the good bacteria that you have inside of your body. And now we can try to control it in a way that we don't get that virus again. So I think that's the thought process. That's the way that I see it. But that's just, my limited view, of things. So we're looking at Microsoft. We haven't taken a peek at Meta yet. Meta is always interesting. So Meta. The area we watch on Meta below the 170s. Now we're going to see if we get a peak. It's funny, back tested right up in this area, and then we're watching for a dip now to the lower level, which is the 155-ish area. If we get through that, the next area is 150 whole. Then below that, 139. It can get filthy McNasty. Meta has held this shelf, right? Look at all this drawdown. June, it held this shelf. If we lose this shelf here, the 155, 154-ish area, it might get nasty, right? Because usually we were in balance here. We broke balance to the upside, extended to the 180s, right? Above these 170s-ish, 70-ish area. But there were other constraints that kept this from, usually when you break out of balance, you're going to move, right? So we're back in here, back in balance. We're going to hit this bottom. If this gives way, just with the momentum right now, with the level of selling, if we gap down, if we get through here, I wonder how far we could extend down if that happens. If for some strange reason the narrative changes and buyers step in, then we have to see. But I don't see a reason for Meta to bounce. What's the good news? What's the narrative? I don't see it. So we'll see how this plays out. We'll see if there's any technical bounces or, any type of pressure release in the market to pull things back up. But watch these levels I just mentioned. If we happen to bounce here, right above the 161-ish area, I think it may be gap down below that on Monday. We have to see how it plays out. Watch for a pull back into the 170s, but I just don't see a reason. If we were up here based on the market being slightly more bullish in narrative than not the previous weeks, I don't know why we would be back up here anytime soon. So we'll see on Meta. I think we're going to go a little bit lower. Keep it moving. Jump over to Tesla. Tesla being Tesla. We'll pull back this little area that we have, the 286 by 259. It's an old area. Actually, no, 286 is here. Then next is 275, then 259. Not sure if we're going to get down to this bottom here, but we are below 301. The next line in here may be the 271 area. That will be potentially the next area that we go to. Looks like the structure is here. And so look at any drops below this 314s. See it here to the left. And then we watch out for the two. Well, first stop is here. So see, let me see. Boom. Boom. 270. Ooh. 258. Pull back. 295. 261. 286. 253. Went on that run. So we have to see here. But this may go as low as 269, maybe even lower to the 259-ish area. Be careful on Tesla. The numbers that they had out of China weren't good. Even though this bill that I think Biden just signed, there is some energy, solar, potentially electric car stuff in there. The news that California is going to be getting rid of gas vehicles. This is the thing. Ford is making a shift in what they're doing globally. As far as focusing on electric vehicles, they see what's coming. So if the thought is that Tesla is going to fill, that entire marketplace in California for electric vehicles, I don't think so. I think there's a lot that Ford and GM will have to say about that, and quite a few other companies. It's an opportunity for all companies, right? And if you just look at the number of electric vehicles on the road, I'm pretty sure there's going to be a huge uptick for other companies that just want to capture that market share and also want to do battle with Tesla on it, right? Whether it be it in price or the type of vehicle that's being provided, the design that's being provided. I think that there will be a battle there. Just my opinion. Okay, SPX. We're inside this little channel here. Want to see if we can get to the bottom. That will be interesting. There are hitches in here. Definitely the 40-15. But this is what we're watching for. Watch this pattern, right? That we still downtrending. And if we continue to sell down to the bottom, it'll be interesting on SPX. But that's what we're watching. Let me just move around a little bit. Goldman Sachs. So next levels we're going to watch here in Goldman Sachs, 330s, below that, the 319s, then below that, the 310s. At some point, high interest rates are good, as I mentioned earlier, for financials and good for banks, because that means they're making more interest on the money that they have. But initially, there is going to be a constriction and a reduction of new accounts, new money. People aren't excited to pay more interest for things. That's why you see the the squeeze in the real estate market, right? With mortgage originations and new mortgage applications going down significantly because people don't want to pay more, right, when they don't have to. And so they rather wait for better conditions to be able to get in. So I do believe that we will see definitely a little downtick here, as the assumption will be that new business should reduce, but longer term, the rise in interest rates will increase the return on investment of current business, and eventually everyone is going to have to do business, right? Maybe not as many homes sell, but their companies are going to have to what's the word, they're going to have their service their debt. They're going to have to do different things. So we'll see how this all shakes out. But usually when you get negative news around interest rates, banks are going to, or news around interest rates, right, banks are going to see a hit based on that. And then their cost of borrowing money, everything is a little bit higher, but it'll balance out and we're going to go back up. But let's wait for this to play out. Let's keep it moving. And oh yeah, I want to go to Dollar Tree. This, when I tell you this, I thought we were going to go up, but we went down. So I was supposed to put a condor on this, an iron condor on this, and I totally fumbled the ball. Busy week because this is the week before kids go back to school. So this week has been nuts, like nuts. But if we're looking at this, I think we want to keep an eye open to see if we make it down here around the 124s. That is possible. Not predicting, but saying that's possible, right? I did not dig into the earnings, and I'd have to dig into those earnings more to see what we have going on. But the potential is that we might see this dip here. And I'm just saying that based on previous chart patterns that we could get down there. Being that we didn't hold up here in the 140s, this dip into the 130s, I think does open up the room for us to go lower. I know I'm a little bit all over the place, but I want to show a few different things. Target, we are back in this zone. Maybe we sell back to the 140s. We have to see how that plays out. I did read an article that was mentioning that a lot of retail stores are finding that people are out of the casual wear business. And so they have a lot of inventory on hand that they're trying to get rid of. They're marking down, which technically should impact them heading into next earnings, right? If you have a bunch of inventory that is DOA, dead on arrival, people are uninterested in that inventory. And usually these companies go through cycles, right? So they have to cycle out all that old inventory and bring in new inventory. And their assumption is that, the new inventory that they're bringing in is going to be a hit with consumers, that they do want those things. I think they're saying it's like specialty occasion type clothing where people are looking for, just based on things having opened back up. People are sort of getting back out there, moving back around. But do expect, this is what you have to remember. COVID is still real, and do expect those numbers to go back up as people move indoors, as kids get back to school, and they're indoors, as parents are back in work, or back to work even more. People are back from their vacations and the summer's over. Do expect those numbers to rise, right? And remember, there's been a drastic reduction in testing. So COVID numbers are at highs, though I don't think hospitalizations are at all-time highs, but COVID numbers are at highs. And the reason why, if you look at what the CDC just did, right? What did they just say? They just changed the way that they talk about COVID, meaning that you can have COVID and still go to school wearing a mask. Their concern is not about health. Their concern is primarily about the economy. The economy is negatively impacted when students are home from school and parents have to miss work. There's an election coming in November. So what you should expect is they're going to do everything within their power to keep kids in school and to keep parents at work. That is what they're going to focus on. That is the focus. I'm sure it's like, hey, we need to keep this economy flowing and this economy booming. People cannot have a negative thought, you know, of COVID, of the way COVID is being handled, of the economy, of the government restrictions, not being able to go to restaurants. People cannot have a negative thought headed into the election, this election cycle. So I think that just when you look at what's going on, that's the focus. I'm not a political person. I'm independent, also on either side of the party. I think, you know, all the parties are crazy. But my point being, just look at things for what they are. And even if COVID numbers go up, I don't know if there's going to be really a significant change in restrictions and regulations headed into the elections. I just don't know. I just don't know. So be careful. Watch your trades. And I know I didn't get into the SPY specifically. And but Target I think is interesting. Might see a little bit more drift. And what I mentioned about inventory is interesting. I'm trying to think if I'm forgetting anything at the moment because I look at so many different things. Maybe, but this is where we're going to stop. Thank you so much for your time. Have a wonderful week of trading. For those who have kids going back to school, congratulations. And remember, you're only one trade away.